Hi, everybody. This is Peter Schiff, and welcome to the Schiff Gold Friday Market Wrap. And what a week to wrap up here in the precious metals. In fact, today is not just the end of the week, it's the end of the month of February as far as trading is concerned. So we're now 2 months in to 2026, and probably a lot of people thought that after the record-setting year in 2025 that we couldn't possibly outdo 2025 and 2026. But so far, we are on pace to do just that. And if you remember, I was saying this. I was saying last year that as good as 2025 was, that I would not be surprised if 2026 was even better. And last year, gold was up the most it's ever been since 1979. It was up, 60 some odd percent on the year. Well, it's on pace to shatter that return, assuming that we continue the pace of the first 2 months, which did include a very sharp sell-off. Remember, gold got up to 5,500 and then went down to 4,800. Now, we're not quite at 5,500 yet, but gold closed. And I don't know if it's officially closed yet because it seems to trade kind of late. But as I'm looking at it now, at about 6 minutes before 5 o'clock on the East Coast time, gold is up $94.80 on the day. And it's last traded at $5,278.70. This is the highest close ever for a week or a month for gold. I don't know if it's the highest one-day close. I forget where it was, when it was got up to 500. But it's definitely the highest weekly and monthly close. Silver is up $5.50 right now on the day. It's trading at $93.66. This is for sure the highest monthly close, but it is not the highest weekly close. It's actually the second highest weekly close. We managed to close higher than this 1 week, a few weeks ago, before, on the way up before the big collapse. But we're now, solidly above $90 on silver. Don't focus on the fact that we did get to 120. Focus on where this rally started. A year ago, silver was like $30, so it's more than tripled. In fact, I jotted down the returns on gold and silver so far for the year, 2 months in. Gold is up better than 21.5%. That's, 10% a month. If it does that every month this year, the price of gold will more than double on the year. Now, I don't expect that higher return, but I would not be surprised if that's what happened. It's not completely out of the question. Silver is up almost 30% so far this year in 2 months. 30% increase in the price of silver. Now, the mining stocks have done better than gold and silver, but not nearly as much as you would think. So the GDX is up 35% on the year, and the GDXJ is up 38%. These are returns in just 2 months. Now, as I predicted on my prior Schiff Gold market wraps and on my regular podcast, I was saying that I believed the GDX and the GDXJ, those are two indexes of gold mining stocks, would hit new highs before gold and silver hit new highs. And that's exactly what has happened. In fact, the GDX is at an all-time record high, so it's never traded this high. But the GDXJ still has a long way to go to get back to where it was in 2011. Now, I think it will take out that high before the end of 2026. But for now, it's just the high since 2011. But for the GDX, it is an all-time record high. But by the time gold gets back up to 5,500 and change, and silver gets back up above 120, which may take a little longer, but it's still going to happen, and it should happen this year. But by the time the precious metals get back to those record highs, the mining stocks, I believe, will be way above where they were the last time, gold was 5,500, which is why you should still be buying these stocks. They're still ridiculously cheap. I'm still expecting a huge move up in a day. I mean, where these stocks go up 20% in a day. That hasn't happened. I mean, they go up 2%, 3%, 1.5%. It's slow and steady. There's no mad rush to buy them. There's no mania. It's just a slow, steady climb because the buyers are still worried that the price of gold is going to crash, which, of course, it's not going to do. If anything, it's going to crash up. They just don't seem to realize that. But let's contrast what's happening in precious metals to what's happening in the stock market, because Donald Trump likes to brag about how great the stock market is doing under his presidency, how the Dow hit 50,000, 3 years ahead of schedule, or 4 years ahead of schedule, he said, which is laughable. But yes, the Dow Jones did hit 50,000, but it's really no big deal because when he took office, it was 44,000. So that's not that big a gain. But the Dow Jones is now back below 49,000. So we're more than 1,000 points below 50,000. But what's significant is that on the year, the Dow was only up 1.25%. That's it. Less than 0.75% per month. In terms of gold, the Dow is in a bear market just this year because the Dow has lost 20% of its value priced in gold. But the Dow is the best performing of those major indexes. The S&P is only up 0.3% so far on the year. And the NASDAQ is actually down by 2.5%. So how is Donald Trump going to be claiming that we've got this super hot economy when the only evidence is the performance of the stock market that he claims is phenomenal, and the market is barely up? And in fact, if you're talking about the NASDAQ, it is down on the year. And it's not like the stock market had a phenomenal year last year. It was up, the Dow was up, the S&P was up, but a lot less than it was up during the first year of Biden's presidency, which Donald Trump claims was the worst economy in the history of the world. And his is supposedly the best. And the proof that he has is this great stock market, which is weaker now or less strong than it was under Biden when we supposedly had the worst economy. Now, the only thing really worse than the stock market was Bitcoin or other cryptocurrencies. Bitcoin so far this year is down 27%. 27% in 2 months. And what surprises me a bit about Bitcoin is that that's all it's down. To me, it looks like it's about to fall off a cliff. And so far, it hasn't done it. But if you look at a long-term chart going back 10 years or so, because everybody in the Bitcoin community always tells me to zoom out. And so I zoomed out, and it really is an awful-looking picture. Yes, there's a big rise. I can see that. But you can also see the collapse. And that chart does not look good. It looks like you need to get the hell out is what it looks like. And that's what I've been saying. But in the meantime, even though Bitcoin hasn't dropped a lot over the last few weeks, it's kind of hanging out around the same area. Right now, it's about 65,500. But if you're still holding and hoping, you're missing out on all the gains in gold and silver or all the gains in the mining stocks. So that's another loss, because if you bought Bitcoin as a proxy for gold, if you were thinking about buying gold or silver, but you bought Bitcoin instead because, you thought it was the fastest horse in the race, well, you were wrong. I mean, it's not even in the race anymore. It's back in the barn. But you're missing out on the horses that are galloping, away here. So I think the longer you wait to sell your Bitcoin and buy gold and silver, the more expensive the gold and silver is going to be. And of course, you run the risk of Bitcoin just completely imploding. And I'm talking about a massive collapse, much bigger than what we've seen so far. I think that's coming. I think the fact that Donald Trump did not mention Bitcoin once during a 2-hour State of the Union address, right? He mentioned everything else, but he didn't touch crypto or Bitcoin. Now, unless he's just holding out for bigger donations, either to Republican candidates or, I don't know, to something that benefits his family, it looks like they've moved on. I think the president doesn't want to go down with that ship at this point because it's pretty obvious that the air is coming out of this bubble and he's got enough problems to deal with. He doesn't want to go down with that. So maybe he's just like, okay, I'm done. I'm done with crypto. We'll see. But the demand for Bitcoin is imploding. What is increasing is the demand for gold. And in fact, the future of blockchain is gold. The demand for gold is increasing because of the continuation of tokenized gold. More companies are getting into tokenized gold. More gold tokens are coming on the market. So a new source of demand for gold is to back up tokens. And of course, that competes with stable coins backed by dollars. And it sure as hell beats Bitcoin because Bitcoin is backed by nothing. And so once you have tokenized gold, it's game over because all of the arguments that Bitcoiners made about why Bitcoin was better than gold are solved by tokenized gold. So you've got nothing. And that's what we're doing at T-Gold. We don't have the tokens yet at tgold.com, but you could buy the gold and silver. And the reason I launched T-Gold before we finished building it out is because I knew that gold and silver prices would keep going up. So I didn't want my followers to have to wait until the whole platform was ready to buy their gold and silver. I wanted them to buy it as soon as they can. Because when it's finally ready, I expect the prices to be a lot higher. So why wait to buy higher when you could buy now and buy lower? And so if you don't have your T-Gold account set up yet, you should go to tgold.com and set it up. T-Gold is part of Schiff Gold. It's just a particular dedicated page. But that website, T-Gold, goes right to that page on the Schiff Gold website. We're still working on the app. It's not ready yet. There's going to be an app that will make this whole process a lot easier. And by the way, I wanted to point out also, even though the S&P is basically flat on the year, foreign stocks are doing great. I mean, most foreign stock markets are up at least 5 or 10% on the year, if not more. In fact, my dividend payers fund that I manage and my dividend payer strategy is up almost 17% on the year. This is not a gold fund. This is foreign dividend paying stocks. And these things are up 17% after being up like 62% last year. Why is this happening? Because money is leaving the U.S. and it's being invested abroad. The opposite of what Donald Trump claims. In the State of the Union address, he's talking about all the money, the trillions and trillions of dollars that is pouring into America. Well, it's not. The dollar's going down, not up. If all this money was coming into America, they would be buying dollars. And U.S. stocks are dramatically underperforming the rest of the world. That tells you that money is not coming into America to invest in our stocks. It's leaving America to invest in foreign stocks. That's where all the money is being made. That's where it was made last year. And the trend is accelerating this year. So I would encourage, my Schiff Gold customers, to the extent that you have stock portfolios, which you shouldn't have everything in physical gold and silver. But if you have money in the stock market, if you're in the U.S., you're in the wrong market. There's not going to be any action here. Right? The U.S. market is overpriced and headed lower. We have a lot of problems, and you don't want to stay invested here. It was a great ride while it lasted. You had a great 10, 12 years, but you got to say goodbye. Right? Don't overstay your welcome at this party because it's not going to end well for the people who don't leave. They're all going to get busted, and they're going to end up in jail. So you don't want that. You want to get the hell out before the police show up and raid the place, and invest internationally, either on your own or use my funds. Go to Europac.com. We've got the Global Dividend Payers Fund, the Global Value Fund, the Emerging Market Fund. We have plenty of funds that I believe are going to have phenomenal returns as money is fleeing the United States and going back to these foreign markets. And the trends are really going to accelerate when the dollar starts to break. Now, we got news on inflation today, and it wasn't good. Now, it's the same news I've been predicting. We got the producer prices for January. And producer prices, I think, are even more important than consumer prices. Even though consumer prices, the CPI, is what the Fed is tracking and what the media always talks about. But the producer price index is a leading indicator of consumer prices. Because before consumers see higher prices, the producers, the wholesalers, they see the higher prices first. Now, they may refer to them as costs, but a cost and a price are basically the same thing. What something costs you is the price that you pay for it. That's why when people talk about cost push inflation, they say, well, prices are going up because costs are going up. That doesn't make any sense because costs are also prices. So you can't say prices are going up because prices are going up, right? The reason prices and costs, which are the same thing, go up is because the government creates the inflation. The government expands the money supply, the base is the currency, but it's the producer who ultimately sees the inflation first, and he pays higher prices and then passes that on to the consumer. So the producer price index is more important because it's a leading indicator. If businesses are seeing all of their component costs going up, what are they going to do? They're not just going to eat it. They're going to raise their prices. And so if you look at producer prices, you're looking into a window of future consumer prices. Now, the increase for producer prices in January was 0.5% in 1 month. 0.5. That is a big number. The expectation was 0.3. Now, last month, prices were up 0.5. And that was revised to only 0.4, so not quite as bad. But if you take the two numbers combined, it's higher than what was expected. But what's significant to me, if you annualize 0.5, you get 6%. So in January of this year, producer prices are increasing at an annualized rate of 6%. Do you think that bodes well for 2% inflation anytime soon? Not a chance. In fact, the year-over-year increase in producer prices is 2.9%. Right? So it's almost 3%. We're not even close to 2%. It gets worse, though, if you strip out food and energy and just look at the core. Core prices were up 3.6% year over year. And the main reason for that was energy prices had fallen. That's all changed. Taking a look at what's going on with oil, oil prices were up today by over $2 a barrel. We're now above $67 for a barrel of crude. But I think we're up something like maybe 17% so far this year in oil prices. 18% on the year. That's a big increase. Those prices are just going to start now really showing up at the pump. Donald Trump is going around bragging about how cheap gas is. Of course, he's exaggerating it. It's not nearly as cheap as he claims, but prices are about to go way up. In fact, I think CPI gain in 2026 is going to be the biggest since 2022. 2022 is something like 6 or 7%, something like that. And I think we're going to be the highest since then. So it's going to be higher than last year, which was 2.7, higher than Biden's last year, that was 2.9, and higher than the year before that. So Trump can't go around claiming that, he's vanquished Biden's inflation if 2026 shows the biggest increase in consumer prices since 2022. Now, of course, Donald Trump will still try to blame this on Biden, right? Although he's already claimed credit for killing inflation. So how is he going to blame Biden if it somehow comes back to life? Because if he killed it, it's dead, right? Maybe it was just sleeping, and now it woke up, and he can try to say, well, the Biden inflation took a nap, and now but obviously, this is not going to go over well in the midterm elections when inflation is once again the number one issue on voters' minds when they go to the polls, because the cost of living, the affordability crisis is going to be much worse come November. Looking at how bad the numbers already are for January and the forward-looking numbers. So this is bad news on inflation. We also got bad news on trade. Not that anybody really pays attention, although they should be, because Donald Trump has made trade a big issue. But we got the merchandise trade deficit, goods deficit for January. I don't know what they were looking for. I just know what we got. And we got $99.3 billion deficit for the month. That is a big number. There's no improvement, none whatsoever. Despite all the tariffs that were supposedly going to, result in all this onshoring, we're supposed to reduce our trade deficit. We were going to make all this stuff here. It ain't happening. There is no improvement in the horrific trade deficits, just like there was no improvement when Trump was president the first time. In fact, they got worse. Trump inherited record trade deficits from Obama and made higher records under Trump. And he handed that over to Biden, and then the trade deficits got even bigger. And they hit new records under Biden, and they're going to hit new all-time record highs under Trump again, because nothing he has done has changed that. And in fact, look at the breakdown of the big trade deficit. Imports were up by 3.8%, up. So despite the tariffs, we didn't import less, we imported more. Doesn't that show you that they're not working? What about exports? We exported less. Our exports went down by 2.9%. That's why we have this huge trade deficit, the opposite of what is supposed to be happening. Trump promised that we're going to import less because we're going to make it ourselves, and we're going to sell more of our products abroad because of all these fantastic trade deals that he negotiated. Well, he negotiated us into bigger trade deficits. We're exporting less than we were before, and we're importing more. All of this is inflationary. All of this is going to put more downward pressure on the dollar, which is going to put even more upward pressure on oil prices, other commodity prices, on gold, on silver prices. So all I could say is just keep on buying. Don't think the prices are too high. That was a big problem for a while. Schiff Gold customers were stuck on the fence. When gold was at 2,000, they were afraid to buy. And then they were afraid to buy 3,000. Well, now you're at 5,200. And, soon you'll be afraid to buy 6,000 and then 7,000. At some point, nobody will be afraid to buy because there'll be nothing but greed. But I think that's not going to happen for quite some time. And I think prices will be much, much higher. Again, we are still early. People might say, well, how can we be early, Peter? Gold's at 5,250. How is that early? I mean, I started buying gold for myself and my clients when it was under $300. So clearly, if it's gone from 300 to, close to 5,300, how can you say it's early? Well, here's the reason I think it's early. Central banks didn't really start accumulating gold till a couple of years ago. That's when they started, really, like 2004, right? That's really when it began. When I first started buying gold, central banks were selling it. That's one of the reasons it was so cheap. Central banks were getting rid of their gold. They just started to accumulate it. So we're early in this de-dollarization process because all these central banks have a lot of dollars they need to unload. It's going to take years and years and years. Plus, they keep getting more. We're spitting out dollars. We have these huge trade deficits. So as fast as the world can get rid of dollars and buy gold, they get more that they got to get rid of. So we're early in the central bank de-dollarization process, and a lot more gold is going to get bought. We're even earlier in the private investors. Yes, the East has been buying gold for years. The Chinese, the Indians, yeah, they've been buying, and they're going to keep buying. The difference is now the West is going to get in on the action because the West has been selling gold. American investors, all 2024, pretty much all 2025, were net sellers of gold. Just look at all the net redemptions that were coming out of the ETFs. So private investors in the West, which are probably Europe, Western Europe, North America, right, particularly the United States, I think 2026 is the beginning. Maybe a little bit at the end of last year, but this year, 2026, is going to be really the first year where private investors in the U.S. decided to allocate money to gold and silver and gold and silver related equities. So this is year one. This is the ground floor. Yes, I've been buying these stocks for 20 years, right? I was early because I knew this was going to happen. I knew eventually Wall Street was going to figure out what I already knew. And, I look at some of my gold stocks. Of course, I wish I had all my money in these, but I have a lot of stocks now that are 15, 20x what I paid for them. Amazing. Now, my worst performing stocks are only 3 to 4 times what I paid for them now. I have a lot of stocks that are 5, 6, 7. But, it is amazing now when I look at some of these prices and I look back at my earliest cost basis. But I was way ahead of my time. Right? Nobody was talking about this. I'm not saying nobody. Yes, there were people, but people, in the mainstream, Wall Street, people that, were highly regarded in the investment industry, managing big money, right? Nobody was doing this, right? I was kind of like a lone wolf in this approach. But this is the first year that I hear the mainstream, you got to be in gold, you got to have allocations of gold. And now, of course, as I said earlier, with tokenization and gold, now being integrated into the blockchain, which is, of course, I've always said, I've been saying for years that, the only thing that it makes sense to put on a blockchain is gold. That's it. And so it's happening. It's happening now. The institutions are embracing gold in crypto. They're embracing it on Wall Street. There's tremendous demand that is coming for precious metals, and it's just starting, just now starting. That's why I've been saying the biggest mistake that people are going to make in this space is selling and thinking they did great. I haven't sold anything, not a share. I haven't sold a single share or an ounce of gold or an ounce of silver because I think there's so much more upside coming because I understood that this was going to happen. I've been preparing for it for longer than I thought. Yes, when I started buying gold, back in the 1990s, right? I thought we would have had a dollar crisis sooner. We haven't even had it yet. Now, what's happening in gold now, to me, is a real indicator that it's coming. It's coming soon. And that's another reason why I don't want to sell anything. Because, what am I going to buy? I want gold and silver. And these mining stocks are so ridiculously cheap. Now, with my new money, yes, I haven't been buying more gold stocks. I kind of wish I did, considering how much they go up, but I'm just so over allocated personally that I've been buying more emerging market stocks. I added to my energy stocks, which I made great buys there. They all hit 52-week highs this week, a lot of the oil stocks I have. But I had to diversify out of gold and silver stocks because I had so much. But I still think for a lot of people, they don't have enough. Most people need to keep buying. Even though the prices have gone up, they're cheaper now than they were when I was buying them. If you look at the price of gold and what they're likely to earn in the coming years, the stocks are a real bargain. But, you know, all the foreign stocks, it's not just my gold stocks. I mean, I have utilities in Europe that have doubled and tripled. I mean, people are moving into these non-U.S. assets now that have been cheap for many, many years. That's why we were buying them. This is a major shift out of U.S. dollars. Central banks are going out of U.S. dollars and into gold, and private investors are going to be going out of U.S. dollars and out of U.S. stocks, which have been overvalued for years. And for years, it didn't matter that they were overvalued because the money kept flowing in. Now the money is flowing out. And what do you think happened today? Tech stocks got killed today. The air is coming out of the AI bubble. What went up? Gold and silver. And gold and silver mining stocks, foreign stocks. That's where the money is flowing. It's going out of risk assets, tech, and crypto, and going into more conservative, real-world stores of value like gold and silver and dividend-paying foreign stocks. So once again, I'm going to give you the same advice that I gave a week ago on the Schiff Gold Friday market wrap. Don't wait for Sunday night when the Chinese are awake and buying. Buy any additional gold and silver now before they have a chance. Buy it Friday night, buy it Saturday morning, buy it Saturday night, buy it Sunday morning. Schiff Gold is open 24/7. Again, try not to talk to a representative if you don't have to because business is picking up, and so we're getting overwhelmed. And it's still, it's nothing compared to what I think is going to be, and we're going to be staffing up. But just check out, use the shopping cart. That's what it's there for. We've really streamlined it. It's very easy to go in there and buy some gold and silver, pay for. You don't have to talk to anybody. Not like, my guys are happy to talk to you. Problem is they're busy. So it's easy if you just order it yourself. And as far as the gold mining stocks, go to Europac.com and check out the information on all of my mutual funds. Europac.com, you can click, there's a link under funds. We also have separately managed accounts, of course, which you can set up. But it's very important that you move out of U.S. markets before the bottom drops out. And it's very important that you get out of crypto because the bottom's going to drop out even quicker. And there's nothing but air. Again, look at that long-term chart. Look at how much more Bitcoin can fall. That's the amazing part. And again, people in the mainstream media are trying to figure out why Bitcoin sold off to 65,000. The question they should be trying to figure out is what the hell caused it to rally to 65,000? Why is something that's worth nothing trading for 65,000? It's not how come it's down from 120,000. It's why is it still 65, right? And before people figure out the answer to that question, you got to get out if you own it. And again, at Schiff Gold, we make it real easy for you, right, with BitPay. So don't say I didn't warn you if you're not selling. Again, if you haven't subscribed to this YouTube channel, again, I probably should have said this at the beginning. I'm trying to get to 50,000 subscribers to the Schiff Gold YouTube channel. We're still not there. So if you're watching this and you're not a subscriber, subscribe. And then tell your friends to subscribe. And maybe we can get up to 50,000 subscribers by the next time I do the market wrap. And again, if you're only watching the Schiff Gold market wraps and you're not listening to my regular podcast, make sure and go over to the Peter Schiff YouTube channel and subscribe there as well. There I've got over 620,000, I think, subscribers, so it's a bigger channel. And my last podcast, I went over all of the lies from the State of the Union address. I called it the spin of the union. But everything he said was bullish for gold. He didn't mention gold, but he didn't have to, because all the stuff he wants to do and all the money he wants to spend and all the programs he doesn't want to cut, the only thing he could do is print a lot of money. And in fact, he advocated for lots of inflation. He wants to keep housing prices up by artificially suppressing interest rates and having the Fed print money. Trump wants more inflation. Well, he's going to get more inflation, and that's going to drive gold and silver prices ever higher and the dollar ever lower. Anyway, that's it for now. Enjoy your weekend, everybody, and I'll be back again next Friday with another live Schiff Gold Friday market